Hi everyone, you're watching a video review of the US stock market. Today we are going to discuss what happened last week as well as Wall Street's future prospects. US stocks incurred losses following the Easter holiday and the results of the earnings reports. Although the drop has been quite modest, the pressure on stocks persists. The fact is that Wall Street is gripped by uncertainty as investors are awaiting the quarterly results of the companies. Apart from that, they are expecting the Fed to hike the key rate due to geopolitical risks. This is why the new week may be rather volatile. Some analysts do not exclude that the equity market could finish again in the red. Would you like to find out the reasons? Then watch our video review. The results of the past week have been rather mixed. Following the release of the Fed's hawkish minutes, the stock market tried to regain ground but failed. Almost all analysts agree that the watchdog will have to raise the key rate as inflation has hit the highest level in 4 decades. The labor market has finally revived. Besides, the Fed also signaled that it would reduce the balance sheet. US Treasuries soared to new highs, hitting for 3% amid expectations of a monetary policy tightening. The US dollar is hovering near 101 points thanks to the same fundamental factors. Geopolitical tensions have escalated even more. At the beginning of the week, there was negative news on the conflict in Ukraine. A sharp increase in shelling prevents the parties from returning to the negotiation table. It means that Western countries may impose new sanctions. For example, French President Emmanuel Macron, who is preparing for the second round of election this week, spoke in favor of an embargo on Russian energy resources. However, European Union leaders still cannot reach an agreement on this issue. Yet the likelihood of such a move is rather high. On April 19, the US will hold an emergency NATO meeting because of the military confrontation in Ukraine. Therefore, the allies may agree on the sixth package of sanctions. Taking into account the current fundamental factors, the stock market has a slim chance of growing. In addition, economists warn about the growing risks of the global energy and logistics crisis. Judging by earnings reports, these risks are quite real. Last week, the Dow Jones closed the week with a slight decline of 0.3%. It's now trading at 34,385. The index is unlikely to rise higher as the geopolitical situation is worsening. This week, speculators are looking forward to Jerome Powell's speech, scheduled for April 21. He will speak at the spring meeting of the International Monetary Fund. Apparently, he will confirm investors' expectations of the rate increase and the impending recession. If so, the stock market may sink again. Alternatively, more dovish comments could lead to an upward reversal. The S&P 500 index lost 1.3% despite the narrow range and prolonged consolidation near 4,400. It has fallen below the support level today. It's trading at a high of 4,385 points. The earnings season is in full swing so far. The reports for the first quarter have been rather discouraging. The pessimistic sentiment is still subdued. Goldman Sachs, Morgan Stanley and Citigroup are reported double-digit percentage declines in the first quarter profit. However, the results were better than predicted. JPMorgan shares dropped the most after the release of the report. They shed 4% due to a decrease in revenue and the outlook for the next quarter. This week, such market giants as Johnson & Johnson, Netflix, IBM, American Airlines, Tesla and AT&T are going to reveal their reports. The heavy tech NASDAQ remains the most vulnerable index to the prospects of rate hikes, US sanctions, and growing logistic risks. During the week, the index decreased by about 2%. It's trading at a high of 13,862. Tesla's earnings report is on tap this week. Its results will also impact the index as the company's shares are included in it. Even other companies' PayPal shares showed the most noticeable decline. They slid down by 3%, following the news that John Reilly stepped down as the PayPal CFO. Rennie will join Walmart as its CFO and Executive Vice President. To support an orderly transition, he will remain at PayPal until late May, and yet PayPal shares plunged by more than 10% by the end of this week. So, this week is likely to be quite volatile and tense for the stock market. The geopolitical risks have eased lately. It gave investors an opportunity to revise their portfolios, factoring in all the current risks. However, geopolitical tensions have increased again this week, and this is why the stock market will hardly be able to gain momentum. Perhaps this is the reason why investors are looking for positive news, even if the chance is low. For instance, they hope that the upcoming earnings reports could be better than the previous ones. They also believe that Powell's rhetoric may be more dovish, which could help stocks to recover. And that's all for now. We wish you everyone a profitable trading week. Keep abreast of the latest market news with InstaForex TV channel. Do not hesitate to leave comments down below, and see you.